Do you currently have an FHA loan and looking to refinance? Maybe you're looking to lower your interest rate. Maybe you're looking to get rid of mortgage insurance and you're just wondering how the process works. Well, in today's video, we're going to walk you through the things that you need to consider when doing a refinance with an FHA loan. We're going to talk about the idea of going from an FHA loan to an FHA loan with regards to refinancing, something called an FHA Streamline. And then we'll talk about the idea of refinancing out of that FHA loan into a conventional loan to tell you what's required. And on top of all of that, we're going to talk about the things that you have to consider when you're thinking of refinancing. And the first is, what has changed since you originally got your loan? Have interest rates pulled back? Are you now able to get a lower monthly payment by refinancing? Or maybe because of appreciation or the idea that you've paid down enough principal on your loan plus the appreciation, you're able to refinance and maybe get rid of mortgage insurance. Or maybe you're looking to pull cash out of your property. Well, in today's video, we're going to walk you through all of those things, when it makes sense, when it doesn't make sense, so you can decide if an FHA refinance is right for you. Now, before we get started, I want to remind you, I'm not a mortgage professional, a mortgage lender. I'm a real estate agent, but I like to make sure my clients out there, those viewers watching my videos, understand that I have no skin in the game when I'm talking about refinancing or the act of, taking on a new mortgage, because I don't benefit from it. So it's really here just to provide you with accurate information. So do me a favor, if you find any value in today's video at all, hit that thumbs up and feel free to subscribe to the channel to stay updated on everything real estate related. Now, in my experience, when people talk about the idea of refinancing, they're usually thinking that they want to try to lower their monthly payments in some form or fashion. Maybe it's lowering their interest rate to take advantage of a lower payment, or maybe it's pulling cash out to pay off debt. And by paying off that debt, they're able to lower their total monthly payment, not just their mortgage payment, but their total monthly payments. Or maybe they're just tired of paying that mortgage insurance every single month and want to pay it off, and thereby saving money every single month. But because we've seen interest rates increase so much over the last 3 to 6 months, a lot of people out there, a lot of homeowners that have FHA loans or just loans in general, don't understand where interest rates are. And I've had a lot of people recently reach out on my videos asking the question, should I refinance my FHA loan or should I refinance my mortgage? So I want to talk about some circumstances when it may make sense to refinance your mortgage. And then we'll talk about the FHA Streamline if you are going to refinance. And then we'll also talk about what you need if you're going from an FHA loan to a conventional loan. So for those of you out there asking whether or not you should refinance your current FHA loan just because you're trying to lower your monthly payments, maybe you're not looking to pay off any debt, you're just trying to get a lower monthly payment and you're looking and saying, hey, does it make sense for me to refinance? Well, the easy calculation for many people out there is to take your interest rate and then add on how much you pay per month with regards to your monthly mortgage insurance, that MIP, that payment that you pay every single month for mortgage insurance on top of your loan. So if you had a 3% interest rate, for example, on your FHA loan, and your mortgage insurance premium that you pay every single month is 0.85%, which is typical for most FHA buyers out there, then you have a combined interest rate of 3.85%. Well, if you're looking at interest rates today and to refinance and take advantage of a new FHA loan would be somewhere around, say 5% based on today's rates, you have a 3.85% interest rate based on what we said a minute ago. So going to a 5% interest rate for most people doesn't make sense. So before you call a lender or a broker and have that conversation, do that quick calculation on paper. Look at your current interest rate, add that mortgage insurance premium on top of it, and see how much you're paying with regards to interest rate. Then do a quick search online and see where interest rates are today on FHA loans. And then you can kind of do a comparison side by side, whether it makes sense to even have that initial call with a lender. Now, maybe you're someone who got a loan years ago prior to interest rates going super low, and your interest rate today is much higher than the rates that I talked about a moment ago. Well, in that case, it may make sense to have that conversation with a lender to try to refinance and lower your monthly payment. Now, for most people, when they're looking at FHA loans, they want to get rid of that mortgage insurance that they're paying every single month. As I mentioned a moment ago, that 0.85%. And because values have gone up so much for so many people out there, we had record appreciation over a 2-year time period. A lot of people are sitting on a lot of equity. They want to refinance and possibly get rid of that mortgage insurance. Well, again, you have to do that calculation that I mentioned a moment ago. What is your combined interest rate today versus what the interest rate would be based on current rates? And for most people, like I mentioned a moment ago, it may not make sense today. But there are people out there sitting on a ton of equity that are looking to pull cash out of their property for one reason or another. Maybe they're looking to pull cash out because they want to buy a Winnebago or another car or do some home improvements to their property. Or in some cases, they want to refinance and pay off debt. And by paying off that debt, you're able to lower your total expenses. So even though your mortgage payment might go up a little bit based on where your current interest rate is, because you're paying off this other debt, your overall expenses actually go down. And that's one of those circumstances that you may consider when you're refinancing. So if you're out there looking at your interest rate on an FHA loan and looking at interest rates today and see by refinancing today that your interest rate's actually going to increase, well, it may increase, which is going to cause your monthly housing expenses to go up. But if you're able to pay off a substantial amount of debt, maybe you have some medical bills, maybe you have some student loans, whatever it is, if you're able to pay those off and lower your overall expenses, then maybe that is something that you need to consider. So it's not going to be a one-size-fits-all for everyone. You have to make that decision whether it's right for you. If you have another opportunity to keep your super low interest rate on your mortgage and you have some money coming from another place to pay off that debt, then I would probably pay off that debt that way versus losing that low fixed payment that you currently have in place. So you have to decide what's right for you in that situation. Now, if you're out there wondering, I'd love to have that conversation with a lender just to see what the rates are, whether it makes sense. What I'm going to do is put a link on the screen here. Go to that website, talk to an expert that I know, that I've vetted, and have a conversation with them and see if it's a good fit for you. There's no cost involved. It's really a conversation, maybe providing some documentation and seeing whether or not it makes sense for you to take advantage of that. Now, let's say you do decide to refinance. That's what you're going to do, and you're looking at, your current situation and wondering, do I stay with an FHA loan? Do I go to a conventional loan? What makes more sense? Well, I want to take a minute here and talk about the idea of going from FHA to FHA, that advantage that we talked about earlier, and then the idea of going from FHA to a conventional loan. One nice thing when you have an FHA loan and you decide to refinance it and you're going back into another FHA loan, you can do something called an FHA Streamline. An FHA Streamline allows you to refinance an FHA loan to an FHA loan, which means that you already have to have an FHA loan in place. And the benefit of using this type of loan is that there's no appraisal required, there's no income documentation required, there's no credit really required. You do have to be current on your mortgage and not have any late payments. You've had to have your current FHA mortgage for at least 6 months before you can take advantage of this. But if you're in a situation where it benefits you to refinance, and that's one of the criteria you have to meet when doing an FHA Streamline, is that you have to show that there's some benefit to you by either showing that you're able to take advantage of a lower rate or a shorter term on your mortgage by at least 3 years. Basically, you have to show that there's some net tangible benefit by showing that you're able to reduce your payment by at least 0.5%. Now, some of the downsides of doing an FHA Streamline is that you can't pull cash out of the property and that you also have to pay the upfront mortgage insurance premium again like you did when you originally got the loan. Now, if you have an FHA loan that you've gotten within the last 3 years, you'll get a portion of your original upfront mortgage insurance premium that you paid on your original loan. You'll get a portion of that back to use towards this new loan. But if you've had your FHA loan for more than 3 years, then there is no, piece of that coming back to you. You're just paying that upfront mortgage insurance premium of 1.75% again. So there's definitely some pros with very little documentation required. But if you're one of those looking to pull cash out, then it really doesn't make sense, or you can't use an FHA Streamline in that case. But I'll be honest, in the market that we're in at the moment, with interest rates, quite a bit higher than they were just 6 months ago, for most people, doing an FHA Streamline today isn't going to be something that can even be considered because of that net tangible benefit that is required. But maybe you're watching this and thinking, well, I want to get out of an FHA loan anyway. I want to get into a conventional loan, something that doesn't have mortgage insurance, or something, where I can pull cash out. Well, in that case, yeah, going from an FHA loan to a conventional loan is something that you should consider. But the same thing that I said earlier is true when doing this, is that it really needs to make sense for you to consider it. So if you're trying to lower your interest rate, you again need to take your current rate plus that mortgage insurance premium that you're paying every month and see what your combined interest rate is. The example that we used earlier is you have a 3% interest rate, your mortgage insurance is 0.85% per month. So you have a combined interest rate of 3.85%. So if you can't lower your interest rate any lower than that on a conventional loan, if you don't plan on pulling cash out, then it doesn't make sense to do that conventional loan. But if you're planning on pulling cash out and paying off debt, maybe doing some improvements and using that cash for whatever, then that's something that could be considered, right? But here's the difference, is that when doing an FHA loan to a conventional loan, you have to go through that original approval process like you did when you originally got in the FHA loan, which means that you're going to have to provide tax returns, you're going to have to provide pay stubs, you're going to have to get an appraisal in many cases on your current residence to make sure you have enough equity there to be able to pull out that cash and do the conventional loan. In addition to that, you're going to have, again, steady income, steady employment. You're going to have to be able to provide documentation that you've been on the job for at least 2 years. You're going to have to provide, a credit report. They're going to run your credit to make sure you meet the credit guidelines with regards to refinancing. Now, FHA allows lower credit scores. So since you've gotten your FHA loan and, your credit hasn't improved, there is a chance that you don't meet the guidelines for conventional loans. And that's one of the potential downsides when trying to go from FHA loan to a conventional loan, is that, the requirements are a little bit more strict on conventional loans. They don't allow the debt to income ratio to go quite as high as an FHA loan. So just things that you need to consider when you're originally thinking about this. Now, earlier I provided a link on the screen to have that conversation. I'll throw it up here again. And that's, a link that you can use to talk to an expert in your state about the idea of refinancing, whether or not it makes sense. They can run some calculations for you, have a conversation with you, figure out where you are, and really quick find out whether or not it makes sense for you. So check out that link. But if you're considering refinancing, honestly, it's just got to be a benefit for you. Each situation's a little bit different for each person. Some people, like I mentioned, are just looking for the lowest interest rate. And in today's market, that's going to be tough to achieve just because of where we've gone recently with interest rates. But if you're somebody looking to maybe take advantage of the appreciation that you've gained, pull that cash out and put it to work, either by improving your property or paying down that debt, and by paying down that debt, hopefully lowering your overall expenses, then maybe refinancing does make sense. But here's what I would recommend. I wouldn't be paying a bunch of points in this market to buy down the interest rate, because that money is a sunk cost. If interest rates do end up coming back down at some point in the future, and you're in a position to refinance, and lower your interest rate, which in turn will lower your monthly payments, but you've paid these discount points, say today, because you wanted to take advantage of a lower interest rate today, then that's money that's wasted. So it's important to understand these things in this market, and also don't go in paying a bunch of closing costs in this market to refinance. Find a lender that can do a no-cost loan for you. There are always going to be costs involved, title, escrow, prepaid taxes, interest, that sort of thing. But don't go with a lender that's charging you, a bunch of fees to refinance a loan. Again, those are sunk costs, and there's a really good chance at some point in the future interest rates will come back down, and it'll give you an opportunity to refinance, and you don't want to have a bunch of sunk costs on your current loan, because it might negate the idea of being able to take advantage of a lower interest rate at some point in the future. But if you're watching this and you're thinking, well, maybe I'm pulling cash out, I'm thinking about buying a property, how do FHA loans work in this market? Do me a favor, check out this video here. I talk about FHA loans in our current market, how you can benefit. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.